hung up on the expected move and then proceeded to extremely slowly shit the bed. This is interesting in that we got a lower high overall and then failed to retest. Um, this might actually lead to some continued downside going into tomorrow. I do think we have maybe a little bit of data tomorrow. Not much. Consumer inflation expectations, economic optimism, but Fed speakers throughout most of the day. Um, with Miran talking at 10:30 and 4 o'clock. But Bostic and Bowman in the early morning. We got Redbook and a 3-year auction. We won't be getting logistics managers index tomorrow, balance of trade, or used car prices. Yeah, there's a JGB auction in the overnight on the 30-year bond, which could be somewhat interesting. Might stabilize the drop in the yen that we've been seeing. Might not. Um, Over on ES, we got hmm, nothing really exciting going on there either. We managed to get a little bit support near the prior week close, but we haven't filled that overnight gap yet to the downside. So we may see a push from future sellers for that off of the back of what's starting to look like a very clear head and shoulders here. Maybe like look at that on the 5 minute. Um, Yields up at the top end of the curve, the 10, 20, and 30 moving. With the 5-year up a bit, we got dollar up as well. This is some of the effect we were expected to see from the government shutdown, possibly accelerated by Japan's move towards a different type of fiscal policy, expansionary fiscal policy. And then we got correlation hitting new lows for, well, not quite the year, but pretty close to the Feb lows. 3-month correlation down as well. So another big push into dispersion with today's upside move. We see that reflected really strongly in NQ's returns. However, commodities also up. Gold up almost 2% today. Oil up, and silver, which is pretty interesting. 3-month correlation down, bond volatility falling off an even greater cliff. Leverage on the carry trade back up to 8.8x, the long end, and 6.46x at the short end. So obviously that's big move with the drop in the yen. However, forward yield on volatility continues to climb slightly higher every day, negative 6.88%, and that demand for long vol seems to still be fairly persistent. And we're seeing, skew drop kind of in line with that. Breadth, not really seeing any significant improvements there. Tech picking up a bit today might tighten things up, but I think things are still fairly over concentrated, and Fed fund futures remain largely unchanged throughout the day today. Maybe down a little bit, but no data there to corroborate any of those moves. We moved up a little bit on the 10-2-year spread, and correlation between VX and cash VIX is continuing to rise. This is the third concurrent day in a row with slightly higher correlation. However, it hasn't broken down yet, and this could continue to drag out a bit longer. Leverage picked up today a decent amount. That helped drive prices higher, but we did not break the all-time high to the upside, with 67.50 now acting as a bit of a resistance. The second failed test might lead to a retest down at 66.99, which is the first level we need to watch for any kind of breakdown. And then we'd be looking towards the 20 MA and the 30 EMA. Anyway, that's it for today. Thank you guys for tuning in, and I'll catch you later.